Hi everyone. Today let's talk about Fundrise. I talk about Fundrise every Money Moves video, and it's been a while since I've talked about it in really much more depth than a couple of minutes once a month. So it's time to talk about it and go over some of my thoughts as well as my Q2 review for 2021, which is really my 2-year anniversary with them since I started in April of 2019. If you like investing and making money, definitely like and subscribe. I make videos like this as well as portfolio overviews and stock overviews every single week, so make sure you hit the bell and don't miss out on any of that future content. Welcome to the Portfolio Bulletin. Let's get started. So let's start off by talking generally about Fundrise. This amount of money is somewhere around 10 to 15% of my overall portfolio, which means to me that it is not a small amount of money, and that I do believe deeply in Fundrise's ability to continue to add value to its users. You can see here, over the past few years, I've made almost $3,300 in net returns, and I am in the advanced long-term growth plus portfolio, meaning that this is a very long-term investment for me. You can see my growth continues to accelerate here, and that Fundrise is continuing to return pretty good returns for me over time. Briefly touching on my long-term goals, you can see Q2 by 2040 gives me a price target of around $501,000 by that period, which means I'm right on track for where I need to be. And they give you a little chart here on where exactly they think I'm going to be by that time frame. The high is around 716,000 and the low is around 413,000. Either way, I should make my goal of around 500,000 by that period, which should be a very large percentage of my portfolio by that time. Otherwise, looking at the overview here, you can see they did improve the newsfeed, which is pretty cool. I do like this much better. It shows more of the actual information versus all of the different tabs, which you can still do different things here. If you go to the view all, you can see all of the different things that they used to advertise on that newsfeed, but instead they do it in a much bigger way, which allows you to see more information. Otherwise, it's always fun to go through these and see how things are performing. And you can see a successful exit here and a return of around 11.25%, which also provided dividends for users. And you can see they're continuing to add to my portfolio with a rental home community near Nashville, Tennessee. You can see my dividends here of $135 for Q2 of 2021, new acquisitions in Pensacola, Florida. And then they talk about flagship acquisitions through the first half of 2021, which is something that I plan to talk about in this video right now. Whenever they do these overviews for the first half of 2021 or any of the previous periods, it's always good to take a look at the progress and what they think of the future going forward. You can see they've invested over $260 million in real estate in the first half of 2021, which means they are continuing to expand quite rapidly with more than $250 million invested. They also talk about their flagship product, which I've actually talked about in the past, but really the goal here is to reduce the cash drag for investors. So part of the problem with Fundrise is when you add money to your portfolio, it tends to sit in cash until they find a place to put it, at which time it starts to generate returns. Obviously, they can't just give you returns if they're not making money with your money. And the idea of this flagship product is that it's going to reduce that kind of cash drag. You can see some of the things that this fund is investing in here with multifamily apartments, things that are very stable and continue to generate revenue on a regular basis. They also talk about the increased demand for improved financing in the post-COVID era, and that people are continuing to seek out more cash for better investments. They then speculate about the fact that the current S&P 500 is trading at a 37.92 PE ratio, which is pretty high relative to what the S&P usually trades at. And they say at this high PE ratio, if you invest right now, you should expect a return of 2.18% annualized returns based on the current PE ratio. Even with the first two apartment buildings that they invested in, you should expect a 4.5% return based on the cap rate, which is a pretty good return in terms of real estate. Anything between 4 and 6% for cap rate is usually pretty strong, and they are able to do those kind of returns with this investment. Then they go through some of the individual portfolios that they've invested in, talking about apartments here in Austin, Texas, Tampa, Florida, and Orlando, with market returns somewhere between 2 and 8%. They also mention some acquisitions in Charleston as well as Houston, again returning 4 or 9.7%. And then a bunch of single-family rentals that they have spread out basically across the country here. Tampa, Dallas, Austin, Dallas, Fort Worth, Sandy Springs, Georgia, San Antonio, Dallas, Houston, Pensacola, Nashville, Atlanta, Charlotte, Dallas again, and Austin and San Antonio. which totals 452 homes or $79 million invested in these type of properties. They also go through the estimated discount rate to the market, which should give you an idea of potentially how much growth there could be in these areas going forward. Otherwise, let's move over here to my current performance year to date, which is a partial of Q3 so far. You can see funds returning between 8 and 10%. Some are a little bit lower if they're in the stabilizing area or ramping up, but even these ramping up portfolios are starting to return even pretty good here at 3.4 and 5.8%. If it's operating, I expect to do a little bit better, even though the West Coast REIT here isn't doing that well. Otherwise, I'm invested in a lot of these longer term funds, which are currently ramping up. But the interval fund, which is a combination of several other funds that I mentioned in a previous video, is doing very well at 12.8%, giving me a total return for this year of 5.2% so far, and I hope this gets closer to around 10 to 12% by the end of the year. Moving over to my portfolio allocation, you can see I have almost $30,000 here in real estate specifically, and then I have the IPO with just over $8,000 invested. But if you click on the note here, they say that this is actually worth somewhere around $9,800 if they were to offer new shares at $10.90. That would be the expected value of my 900 shares. And then you can see some of those things that were mentioned previously. Single family rentals added 69 homes here in Pensacola, Florida. A commercial real estate investment here in Maryland. Apartments in Florida, the ones we mentioned previously, and some stabilized apartments in Charlotte as well as Tampa, and then the list goes on as I mentioned previously. I don't think I saw Louisville, Texas in here before, but continuing to diversify my portfolio across the country in a way that I certainly could not do myself if I were to go out and try to buy these individual properties, even if I had this kind of money. It just doesn't make sense for me to do that, and that's why Fundrise is such a great opportunity. All right, finishing up here with my Q2 results for 2021. You can see my net returns were $1,129. I invested $1,950 of my own money, representing a little bit over $3,000 in account value growth. And then my dividends were $135 of that, where my appreciation was almost $1,000 of that, which makes sense. I am on the long-term growth portfolio, which means I'm not going to get a ton of dividends, and most of my money is going to come from appreciation. You can see this was by far my best quarter overall, with the results here in 2020 not doing nearly as well. Q4 of 2020 was okay, almost $800. Q1 2021 only $200, but a little bit over $1,100 here in Q2 of 2022. You can see I paid just over $5 in advisory fees for my average account value during this period of almost $27,000. So my Q2 rate annualized is actually only 0.08%, whereas my typical fees are estimated to be around 0.15%, which means I actually paid less in advisory fees than I would expect to pay over the longer term. And then it's good to pay attention to their suggested readings, which we did already talk about the Flagship acquisition, but you can look at understanding historical returns here if that's something that you're interested in. Basically, it just talks about how your returns grow over time in terms of your first full year with Fundrise, generally being pretty small. And as you get into that second and third year with Fundrise, you're going to level out closer to those higher returns around 12 to 15% per year. And this is kind of what I talked about here previously with funds that are ramping up, getting into that stabilization period, or moving into the full operating returns, which as I mentioned, you should expect a higher return closer to that 12% over time. And then they show it in a little bit more detail here. Funds that are in that ramping up period have pretty low returns. They actually had a slight decrease here in 2017. And then once those funds started getting into their operating phase, they generated $6,000 over that 4-year period, starting with only $10,000. Of course, if you're not an investor with Fundrise, I do think it is a great investment for myself personally. Of course, this is not financial advice. This is all for entertainment purposes. If you do choose to join Fundrise on your own, there is a link in the description that will get your advisory fees waived for the first 90 days of your portfolio period, which should save you at least a few dollars over that time. Let me know down in the comments section what you think of Fundrise. Is this a good investment for you? And if you are already an investor with Fundrise, what do you think of the platform, how it's grown, and what have your returns been so far? Definitely like and subscribe if you got any value out of this video. Like I mentioned before, I make videos like this and other videos on individual stocks in my portfolio every single week. So make sure you hit and don't miss out on any of that future content. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.